Mr. AG here. Iran just launched a new round of missile and drone attacks across the Gulf. Not one country, 4 countries. Bahrain hit, Qatar hit, Kuwait hit, the United Arab Emirates hit, 4 sovereign nations struck by Iranian missiles and drones in a single night. And while those missiles were flying, silver quietly climbed back to $87 in the early Asian session. I want you to think about what that means because the last time we spoke, silver had broken below 86. And I asked you whether the inability to rally during a war was a warning sign or the setup of the decade. Well, tonight, silver answered. It bounced off the lows in the Asian session. While missiles were literally landing across the Gulf, safe haven flows are returning to this metal, and the timing is not random. Drop by Mr. AG in the comments right now. Tell me where you are watching from tonight. And I have a very specific question for you. If you are watching from Bahrain, from Qatar, from Kuwait, from the UAE, from anywhere in the Gulf region, what is happening on the ground right now? What are you seeing that the mainstream media is not showing? Are people moving capital? Are banks operating normally? Is there panic or is there calm? Your first-hand perspective is more valuable than any analyst's opinion right now. Drop it in the comments. Let me know before we go further. For everyone, especially the new viewers, finding this channel because of the geopolitical situation, let me be crystal clear. I do not sell signals. I do not sell courses. I do not run paid memberships. I do not sell anything. Period. If anyone contacts you claiming to be me or representing Mr. AG and offers you any paid service, block them. That is not me. I will never sell you anything. I am only on YouTube and X. My handle on both is Mr. AG Asian Guy. That is the only way you know it is really me. I give you the data, the context, both sides, the bullish case and the bearish case. And I let you make your own decisions. I do not tell you to buy, and I do not tell you to sell. I tell you what I am seeing, and I trust you to use your own brain. Now, let me connect everything that is happening right now, because there are multiple threads converging, and each one amplifies the others. The war. The U.S.-Israeli campaign against Iran is now in its second week, and escalating, not de-escalating. The Pentagon has reported its most intense strikes of the entire conflict. And now Iran has responded by launching attacks across 4 Gulf nations. This is no longer a contained bilateral engagement between the U.S., Israel, and Iran. This has expanded into a regional conflict involving multiple Gulf states. When missiles land in Bahrain, Qatar, Kuwait, and the UAE, the entire security architecture of the Gulf is compromised. These are countries that host major U.S. military bases, that serve as global financial hubs, that are home to the regional headquarters of virtually every major Western bank and corporation. And they are now under direct fire. Here is where it gets complicated and where you need both sides of the narrative. President Trump claimed that Iranian officials contacted him seeking to end the conflict. His exact framing was that Iran has sought to come to an end to the conflict, but he immediately followed that by saying it was too late and that the U.S. was working to destroy Iran. So, on the American side, you have a president who is simultaneously claiming the enemy wants peace and declaring that the objective is total destruction. That is an unusual combination of signals. On the Iranian side, Foreign Minister Abbas Araghchi directly contradicted Trump's claim. He stated that Iran has not asked for a ceasefire and has no plans to engage in negotiations. Let me say that again. Iran's foreign minister publicly denied requesting any ceasefire and said negotiations are not on the table. 2 completely opposite narratives from 2 sides of an active war. One side says the other is seeking peace. The other side says absolutely not. Someone is not telling the truth. And the market has to price both possibilities simultaneously, which is why you're seeing these wild swings in silver and every other asset class connected to this conflict. Now, the silver data. And this is where I need everyone to focus because the numbers right now are extraordinary. Silver is trading around $87 after recovering from the drop below 86 we discussed last time. The fact that it bounced in the Asian session while missiles were flying tells you something about the underlying demand. The Silver Institute has projected a supply deficit of 117.70 million ounces for 2025. That is not a small gap. That is 117 million ounces more demand than supply. And this is coming after multiple consecutive years of structural deficits that have been steadily draining above ground inventories. The Silver Institute also projected that demand will stay largely unchanged in 2026. Now, there's a nuance here that I need to break down for you because the headline sounds neutral, but the composition is anything but neutral. They expect healthy gains in retail investment demand to offset losses in jewelry, silverware, and some industrial categories. So the total stays roughly flat, but the mix shifts. More investment demand, less discretionary demand. That shift matters because investment demand tends to be stickier and more price sensitive on the upside. Retail investors buying bars and coins are not buying silver to make earrings. They are buying it because they believe the price is going higher, or because they want a hard asset outside the financial system. That kind of demand does not evaporate when the price dips 2%. It accelerates. Every dip becomes a buying opportunity for that cohort. And that is exactly what we are seeing at $87 right now. And here is the historic context that most people still have not fully absorbed. Silver surpassed its 1980 all-time high of $50.36 per ounce in 2025. That was a level that stood for 45 years. The Hunt brothers' squeeze in 1980 pushed silver to that level, and it took nearly half a century for the metal to get back there and break through. The fact that silver is now trading at $87, nearly 73% above the 1980 high, tells you something fundamental has changed. This is not a short squeeze. This is not a retail mania. This is a structural repricing of silver, driven by supply deficits, industrial demand, monetary debasement, and now geopolitical instability that is literally reshaping the map of the Middle East. A weak US dollar and the likelihood of declining interest rates remain tailwinds. Even though the market has scaled back rate cut expectations because of the inflationary impact of the war and oil prices, the broader trajectory of the dollar remains downward. You cannot run the kind of fiscal deficits the United States is running and maintain a strong currency indefinitely. The math does not allow it. And every incremental weakening of the dollar is mechanically bullish for all dollar-denominated commodities, including silver. Now the employment report. Traders are awaiting the U.S. employment report for February for further direction. This data was collected before the Iran war began, so it reflects pre-war economic conditions. If the data comes in weak, it reinforces the case for rate cuts, which is bullish for silver. If it comes in strong, it gives the Fed cover to keep rates higher for longer, which is a short-term headwind. But here is what I want you to understand. The employment data is backward-looking. It reflects a world that no longer exists. The economy operating before missiles started landing across the Gulf is not the economy operating now. Supply chains are disrupted. Oil is spiking, insurance markets are seizing, shipping routes are compromised. Whatever the February employment report shows, the forward-looking picture has fundamentally changed because of the war. The market will react to the number short-term because algorithms are programmed to trade headlines, but the number itself is essentially irrelevant to the medium-term outlook because the world changed after the data was collected. Bearish case. I always give you both sides. Silver bounced to 87, but it has not reclaimed the levels it fell from. The recovery is tentative, not decisive. If the employment report comes in stronger than expected, the dollar could strengthen and push silver back below 86. The war could reach a sudden diplomatic resolution. Trump is claiming Iran wants peace. If a ceasefire materializes unexpectedly, the geopolitical premium comes out of every safe haven asset instantly. Silver could drop several dollars in a single session on a peace headline. Rate cut expectations have been pushed back to September at the earliest, with only one 25 basis point cut priced for the entire year. That is a dramatically less supportive monetary environment than what silver bulls were expecting just months ago. The Silver Institute projects demand largely unchanged in 2026, which means the explosive demand growth story may be moderating. If industrial demand declines in certain sectors and retail investment cannot fully compensate, the deficit could narrow. And a narrowing deficit reduces the urgency around the supply story. Oil spiking is inflationary, which could force central banks globally to maintain restrictive policy longer than expected. That sustained restrictiveness is a headwind for non-yielding assets. The paradox, where war is simultaneously bullish for safe haven demand and bearish through the inflation and rate channel, has not resolved, and it could resolve in the bear's favor if inflation reaccelerates sharply. That is the bearish case. Bullish case. Iran just struck 4 Gulf nations with missiles and drones and denied requesting any ceasefire. This war is escalating, not de-escalating, regardless of what either side says publicly. The longer this conflict continues, the more capital flows into safe haven assets. Silver, at $87, is holding above the lows and rebuilding. The bounce in the Asian session during active missile strikes suggests that real money is buying dips now. The 117 million ounce supply deficit in 2025 is a massive structural imbalance that does not resolve with 1 month of price weakness. Above ground inventories continue to draw down. London lease rates remain at historic highs. Physical tightness is real and intensifying. Silver has broken above its 1980 all-time high of 50.36 and held. That was a 45-year resistance level that is now support on the long-term chart. The technical posture on the weekly and monthly timeframes remains significantly bullish. Near-term chart structures have improved over the past few weeks, which continues to attract trend-following speculators to the long side. The combination of a weakening dollar trajectory, eventual rate cuts even if delayed, structural supply deficits, and escalating geopolitical tensions creates a backdrop that is overwhelmingly bullish on any time frame beyond the next few weeks. And here is the point that I think matters most right now. Central bank demand for gold remains at elevated levels. Sovereign institutions around the world are accumulating hard assets. When the entities that print fiat currency are themselves buying gold and supporting the precious metals complex, that tells you the smart money has already made its decision. They are choosing hard assets over their own paper. And silver, which historically outperforms gold during mature bull market phases as the gold to silver ratio compresses, stands to benefit disproportionately as this cycle plays out. For those of you watching from India specifically, I want to hear from you because Indian physical demand for silver has been a massive factor in this market. Is the war changing buying behavior? Are people accelerating purchases? Are premiums rising at local dealers? Your perspective shapes the picture for everyone here. Drop it in the comments. About 70% of you watching right now are not subscribed. If this kind of raw both sides analysis is helping you understand what is really happening and make better decisions, hit subscribe. Join the WhatsApp community for real-time updates and discussion. Link in the description. Follow us on X at Mr. AG Asian Guy for breaking alerts. 3 key takeaways. Number 1. Iran launched missile and drone attacks across 4 Gulf nations overnight. Bahrain, Qatar, Kuwait, and UAE all hit. Trump claims Iran sought peace, but says it is too late. Iran's foreign minister directly denied requesting any ceasefire. The war is escalating and expanding from a bilateral conflict into a regional one. Silver bounced to $87 in the Asian session during the strikes, confirming that safe haven demand is returning to this metal. The next sessions will tell us whether this bounce has legs or whether it fades into another retest of 86 and below. Watch the 86 support level. If it holds on retests, the floor is solidifying. If it breaks again on volume, 84 and 83 come into play. Number 2, the Silver Institute projects a 117 million ounce supply deficit for 2025, with demand largely unchanged in 2026 as retail investment gains offset losses in other segments. Silver has surpassed its 1980 all-time high of 50.36 and is trading 73% above that historic level. This is a structural repricing, not a speculative spike. The deficit, the physical tightness, and the demand composition all support higher prices on a medium to long-term basis, regardless of short-term volatility driven by war headlines and employment data. Number 3, the employment report for February drops soon and the market will react. But the data is backward-looking, collected before missiles started flying across the Gulf. The forward-looking picture has fundamentally changed. The real question is not what happened in the labor market in February. The real question is whether this war resolves diplomatically, creating a sharp short-term reversal, or whether it escalates further, creating sustained safe haven flows into precious metals. 2 opposite scenarios, both credible. Have a plan for each one. Know your levels, know your time frame, manage your risk, drop Mr. AG in the comments, tell me where you're watching from. Tell me what your gut says about silver this week. Does 87 hold and we push toward 89 and 90, or do we retest 86 and the lows first? I want to hear from you. Share this with someone who needs the full picture, not the mainstream version. Join the WhatsApp community, link in the description. Follow us on X at Mr. AG Asian Guy. Do your own due diligence. Understand the risks. Be accountable for your own decisions. Use your brain. Do not follow anyone blindly, including me. Stay sharp. Mr. AG out.